Hey guys, welcome back to Fiscal Voyage. My name is Felix, and today's video we're going to talk about a real estate investment trust company, Simon Property Group, ticker symbol SPG. And we're going to talk about this company. They just announced a great Q3 earnings report, as well as they increased the dividend by 10% this report, and year over year is up over 26%. So we're going to talk about the fundamentals as well as the technical of this stock to see if it's a good buy at today's price. It had a big gap up today, over $10 jump in one day. So we're gonna see if it's a good buying opportunity now. And if you're new to the channel, make sure you hit that subscribe button and let's get started. So Simon Property Group Inc., ticker symbol SPG, is going for $158.99. The current yield is 4.42. However, it had a nice run up today at 6.45%. Thus, the yield is going to be much lower because of this increase in price. Because when you have price increase, the yield goes lower. As the price decrease, the yield goes higher. So the price increase, the yield goes lower here. So one of the things that I really liked about this company, I personally own shares of this company, and I've made videos of this company when it was in the $60, $70 range because of the COVID pandemic last year. And I bought shares at that time period. I'm up over almost 70% if you include dividends. So one of the things that they just released earnings, so this is why it's up over 6%. First off, in that earnings report, they increased the dividend over 10%. And if we go back year to date, they've increased it 26.9%, which is outstanding. And this is also, it's still not at the level pre-COVID, because they actually had to cut the dividend because of the pandemic, with a lot of stores not able to pay rent and things like that. But they're coming back strong. And the price, I'll show you later in the technical analysis how strong the price has came up. But you can see here they just announced a 10% increase. So year over year is 26.9% increase. So it went from $1.50 per share per quarter to $1.65. So outstanding increase. And in that earnings report, they had an outstanding earnings report. You can see here it beats estimate by over 60 cents in funds from operation, and it beats revenue, and it raises guidance, and of course the dividends that we just talked about. You can see here revenue is at $1.29 billion for the quarter, which is up 21.7% year over year, and it beat the analyst estimate by 90 million. And you can see here they made $3.13 funds from operation for Q3, which beats estimates by 60 cents. So overall, the company had a tremendous quarter. So we look at the fundamentals down, because even though the company had great quarters, we always have to look at the fundamentals. That's what creates the value in these companies, which allows us to buy at a reasonable, attractive price. So you can see here, earnings had a big drop in 2020 because of the pandemic. It dropped 20% from $8.30, from $10.89 to $8.68. So a 20% decrease. That hurt. And you can see here the dividend was cut also from $8.30 for the year to $5.20 last year, and right now they are $5.70. They still have a long way to go before they make the dividend equal to pre-COVID times in 2019 of $8.30. But you can see here before the pandemic last year, the company was growing earnings very nicely. You can see here 19% increase, 14% increase. They had a flat year, another 13%, 6%, 15%. So tremendous year over year growth in earnings for this company. However, in 2019, they had a down year of about 1%. And this is when I actually started to get in. It was in, I think, 2018 is when I bought shares. I had a nice run up, and then I bought more shares in 2019 before the pandemic, and then the pandemic hit, and I was down I think like 60%, 70%, but I didn't sell because I knew things were going to open up eventually, and this company was going to come hard. So what I did actually was bought more shares. I didn't buy shares at the lows. I bought shares around $70, I think it was, when it was starting to run up, and now I'm up very nicely, over 60 to 70% overall. So I held, it was dark times during that time, but I knew the company was going to come out strong because of the CEO is a great CEO. And you can see for 2021, they're expected to make 15% increase in earnings or funds from operation from $8.68 to $10.01. But the valuation, again, is very important. You can see here right now it has a PE or price to adjusted funds from operation around 15, and the company tends to hover around the 17. So it's still kind of slightly undervalued if you look at that metrics, but if we shorten that time period a little, you can see it's actually right at that 15 for the last few years normal average PE. So that means that the company could be fairly valued right now. It might be slightly undervalued depending on what you look at. It has an S&P credit rating of A-, which is outstanding. 85% long-term debt to cap. It is a capital-intensive type of company because they, again, they do real estate. And the blended price to adjusted fund from operation at 15.25. So overall, I like the fundamentals. Earnings expected to continue to grow. If you look at the forecast, they have a slight growth around 1.5 to 2% here. 1.73, and you can see it is overvalued based on these forecasts, but I think they're going to beat considering that this earnings came out earlier today, so they haven't updated this information. But if we go look at the technical, so if we look at the technical analysis, this is the daily charts. You can see the daily has been on an uptrend, following nicely the 50 moving average, the 50 daily moving average, and it had a big gap. This is the same day period, but just a close-up time frame. You can see it had a big up from 147 and had a huge jump to 157. So basically $10 gap from yesterday to today's gap because of the earnings report, outstanding earnings report. So we're gonna look at the monthly and the weekly. So up here is the monthly chart, and you can see here it had a huge run up. You can see green, a slight red here, slight red here, slight red, but green up. And I actually have an alert at 182 to let me know if this stock gets to 182, I may think about selling, because if we expand this, you can see this has a lot of resistance at this level. Try to go higher here at 191 here as well, here, and then over here at 190. So that 190 area looks to be strong resistance. It's possibly what I think will happen, because this is extended and it hits to that 190. It possibly has a pullback, maybe back to the 125 or back to here to 145. So I may be interested in selling the stock at around the 180 to 190 range, or just put my trailing stop so to protect my profit. But overall, again, the weekly, same thing. It's just been going higher and higher. It's past the weekly moving average of 200 as well as the 50 weekly moving average. So all that looks good. It's in the uptrend. So it has the possibility to continue to go higher up to 190. I personally, if you don't own shares of this stock, I wouldn't be buying it right now. I will wait for a pullback, maybe to the 130, 125 area, and then buy shares and take it all the way back to 180, 190. That's what I would do if I were you guys. If you don't have shares, if you do have shares and bought, during the pandemic and when I made those videos, you're sitting very nicely right now. So overall, I like this company a lot. I just don't think at current prices is justified for a purchase. I will wait for a pullback to $125, maybe to $115, $125, $120. That's what I wait for a pullback. But overall, Simon's Property Group, great company, outstanding dividend increase, a very happy shareholder here. So thank you for watching. If you enjoyed this video, hit that like button, as well as let me know in the comments what's your thoughts on SPG. You like it at this current price, or plan on buying shares, or you waiting for a pullback? Let me know in the comments below. If you're new to this channel, make sure you hit that subscribe button, and I'll see you guys in the next one.